Good morning. Hopefully everybody's having a good morning. We're going to get through this. Let me share my charts. That'd probably be helpful. Okay, so today we are going to, let me share my charts. Today we're going to build, can you guys tell me in the Restreamio or the app that you guys can hear me? Always have issues with if people can hear me or not. Good morning, Andreas. Can you confirm that you can hear me? All right. All right, so starting on the NQ, can anybody hear me? Hello? All right, it looks like I'm going. Go back to messages. Audio good? Okay, moving on. Okay, starting with our process. NQ on the daily chart, we're above previous month 50%, which is right here. We're above current month NFP Friday. Yes, since September, did we get a daily close above NFP Friday and above previous month 50%? We've been in a trend market since September 11th. Called it all. Moving on to the weekly chart. We're going to try to get through NASDAQ and CL today. So on the weekly chart, we have priced in 3.31%. Remember, going into the first trading week of the month, we're usually between 2.5%. The last trading week of the month, we're usually between 2.5 to 5%. And that leads to either week 4 of the month or week 1 of the month to slow down, right? And let things catch up. And so that means we can still move up. We still have right here near the all-time highs before that takes effect. All right, we'll go into this part of the range, and does that meet our average weekly 8-week criteria, if that's even possible? But the purpose of this step is to see what economic news that the market is pricing in, whether it's economic news, earnings, doesn't matter. And is it realistic to think acceleration Thursday versus a turnaround Thursday today? All right, so for the ICT traders in the group, this is a Sunday 1800 to 06. We've come down 1, 2, 3, 4, 5, swipe 6 times. We revisited this price until Tuesday's 9:30 to 10:30. We put the low of the session in, and then that indicated that this would be the low of the week. We've come back and found support on the top of for the DR traders. You guys used Tuesday 9:30 to 10:30 range for your weekly, and usually either Sunday we'll swipe below it or Tuesday we'll swipe below it and then go for the week, and that's what. So it looks like we use Sunday to swipe below and go. So what is important about this chart is based off of what we found by NFP Friday and previous month 50%, we expect to find lows of the days, right? Between 5 o'clock and 11 o'clock in the morning. Right now, we can see that we are in the parabolic move to the upside since 1800, which is fine. Our biggest job is not to short it, right? Until it gives obvious signatures to short it. So moving on to the next part of our process. What are the obvious clues? Obvious clues is momentum's up we took out previous day's highs. We couldn't dig into the previous day midpoint right here, so momentum is up. Right, so now we're going to put our time-based probabilities on. And the reason I'm going fast is because I'm trying to get crude oil knocked out this morning too. So time-based probabilities being Globex open, Globex open for the ICT community. This is known as your true day open, which is at 1800. We're going to put our settlement on, which is market close 1615. And we're going to put our midnight on, right? And why these three probabilities are important is because settlement deals with, you know, the RTH gap. Globex open, I use pretty close to the same way we talked about using, like on the weekly chart here, on the 65, the same way we use Sunday, 18 to 1900, and the same way DR uses Tuesday to kind of understand the weekly profile. I do the same thing with a Globex open during the day, and then we put midnight because it has a high retracement factor and everything tends to anchor off of it. All right, so let's put those on our charts. All indicators I'm using should be free, and you just need to look them up. 15 minute, I should be on the 15 minute. Show one New York time, 1615. Cool. Let's plant settlement. 1800. Should be right around settlement. It is, meaning that there's no off-market news events that came out to make a gap. What's that? And then put midnight in, which happens to be at the midpoint of the 12-hour cycle. Okay, so now real quick, we're going to go to RTH. And it's a Thursday. So on a Thursday, there's a 74% probability that we retrace at least 10% of the gap. %, we retrace 5%. Let's go 50. And this is out of the last 436 days. So 50% is 61. 60% is 60%. 70% of the gap fill, 58. 90% of the gap fill, 53. 100. So 100% of the gap fill, 52. All right. So based off of where price is right now, to where our actual settlement is. Let's go back to electronic trading hours. And then throughout the day, I'll just update this. Let's turn off midnight snap. The closer we get to RTH, we know that there's a 50% chance that this gets tagged. I guess I should have put the probabilities in. Let's do that. Let's put the probabilities next to this. Got to go to regular trading hours. 1 minute. Let's put this over here. All right, now we can draw next to it. Okay. Regular trading hours. Okay, gap 100% on a Thursday has 52. So right here at this gray line, we're going to put 52%. Damn, that's intrusively big. We're going to go 75% now. Do 15% for the RTH. I will. Give me a second. 75 has. I wish there's a way that I could just put these on the lines. That would be cool. I have to reach out to a coding buddy. 57. 50% of the gap being filled. 65. 25% of it being filled. 69. Oh, we're going to say 70. This is out of the last 400 days. If I wanted more, I can get more, but there's no sense in it. And then for O, you can put it on the lines using the fibs. Jeremy PC, how in the heck do you do that? I'm just a dumb infantry grunt, dude. I barely know how to pull up trading view. 72% for 15%. Nice. Okay, so let's figure this out real quick. How do I do this, Jeremy? You can put it on the line using fib. Oh, that's actually smart. But then so the problem with that is, so to get the midnight snap indicator, you have to go to Austin Clark's little pinned tweet and register for it or some shit like that. I don't know. Like, go to his Twitter and he'll give it for free. Problem with that, Jeremy, is like, as we're still in the electronic trading hours, right? Price is going to fluctuate, right? And I'm going to have to move this up and down until 9:30. So instead of moving, I guess I'm going to have to move them because of this anyway. But cool. Now we put our time-based probabilities on. We put our gap probabilities on. Now, obviously, this will continue to move up and down the close based off of what price is doing to the until 9:30, and then it will anchor. Right. All right. So now we're going to put our structure-based probabilities on. Right. So this little box right here is the 1800 to 06. Right, and we're going to put the probabilities on the 15-minute high, the highest 15-minute, and the lowest 15-minute. Right, which to get that data, you got to collect all the data, all the 15-minute data retrace. So like, if this 15-minute high takes out this 15-minute high, what's the probability of this low being returned to, and so forth and so forth and so forth and so forth. And that's an easy project and a very eye-opening project, especially if you do it on the 15-minute, how the market truly moves. And one that I think every trader should do. All right, so 1815 has an 87% probability of being returned to. put structure 2 up here. Obviously, it's not 6 o'clock, so it can continue coming up here, making highs. I don't think it will. If it does, I'll just put this where it needs to go. All right, so this highest high was 345. 345 has a 79%. And this is over the last 2,000 days. Okay, so now, so far, let's recap what we've done so I don't lose anybody in the process. Right, so far, and this will be quick, we went to the daily chart. We identified where the previous month 50% is in the NFP Friday. If we're above that, we can expect a trend higher, which we've been talking about for this whole year. And if we're below these two elements, we expect a trend lower. This means if we're trending, right, we can expect the low of the day to be between 5 o'clock and 11 o'clock, right? Statistically speaking, that's when it should happen. We can buy equities for swing positions. We can go on risk premium harvest campaigns, meaning selling options premium. And this is the easiest money that's out there, is these 3 steps, right? During this stall. When we're stuck in the middle like this, it's our job to sit on our hand and use the least amount of margin and leverage, et cetera, et cetera. All right, then we moved to the weekly chart. We said, hey, we need a constant variable because like the market will go up, up, down, down. These are all hits, right? So this is, think of these as weekly close prices, right? And the mean, like we revert back to, or we go so far away and then we put our weekly close price in, right? And so this is the distance between a constant variable and the close price that's known as the variance, right? And why the variance is important, because this is the step. Have you ever heard anybody say the market's pricing in this effect, or the market's pricing in this effect, or the market's pricing in this effect? Without getting too fancy with it, what they're talking about is from a historical standpoint, you know, like what does it price in under that situation, right? We keep it simple here, so we just use this 5 EMA not to trade around, but to measure, use as a constant variable, so we can see, you know, like this is, let's start right here. Let's use this price tool, right? This is week 1, 2, 3, 4, right? We got all the way up to 3.44, and then week 1 and 2 of the next month slowed down before it continued to trend up, right? This is week 1, 2, 3. We get 3.88%, and then the market slows down, right? Same thing here. Week 1, 2, 3, 4. The market gets 3.44%, and so forth and so forth. So, like, it's even this obvious, right? And this is a seasonality move right here, and this is a seasonality move right there. So this allows you to see, isn't whatever the current news or earnings cycle, is it overextending the market, and what to expect? And then the last steps that we did on this chart was we went to the 65 or 60 minute, right, to see the low of the week or the high of the week. Is it formed based off of the 18 to 1900 hour and the Tuesday 9:30 to 10:30? And it looks like, yes, the low of the week was put in here. And the more you do this, the more you'll be aware of this during live price action, right? So you're like during Sunday, during this whole week, every time we came back to this Sunday or this Tuesday and we rejected off the midpoint, I was paying attention to that, understanding that this had happened during the night. This low right here had happened during the 9:30 and 10:30, and we did complete destruction and instant recovery, which is a sign of strength, right? Just like if you have gap ups, right? If you have gaps that are not filled, right, completely, we don't short this thing with expectations of us filling this gap. We long this thing, we hit the bid, because this is telling us the market doesn't need to return to that. It's that power, it's that strong, like this one right here, especially gaps that happen in rollover. All right, and then so far we went to put our actual daily probabilities on. We put the time-based probabilities on: Globex open, settlement, midnight. Structure probabilities, which is the highest high. I do have a silly question with the 1800 to 06 structure 1 and 2. If price stays above the midpoint, does it mean I can only look for long opportunities and vice versa? Further, because of my line of work, because I work for a sell-side organization, I am not allowed to give any style of trading advice whatsoever. I'm almost like I'm already under investigation. So like, Michael, like I would love to sit here and talk how to trade this stuff, but I'm completely handcuffed, brother. So like we do just pure probabilities, like in statistics on this channel. Okay, so now we put our structure-based probabilities on, and we put our gap-based, our RTH gap probabilities on the chart. Now we're going to base what Asia has done and what London has done and put our projection-based probabilities on, right? This is a database that I'm talking with a coder and building, and then that would be a free script, just like the veteran is a free script for you guys to use to figure out these probabilities. Okay, so using the 1930 to 2030 range, like the DR crew does, right, all the way to 02, this shows variables that have happened, right? Now they go very in detailed. We're in relationship to New York, all this with the size of that range. I don't need all that, right? I'm not saying it doesn't work. I'm just saying I don't personally need that. I've tested it all, and this is what I use. Like this is the 1930 to 2030 range. It goes long and stays long until 02, right? So we're going to put long, true. All right, and out of 4,280 days, that variable brings it down to 1,606 days that this scenario has happened in Asia. Did we come back and touch the midline? No, we did not. We are going to put, we got midnight. We are going to, okay, so now we're going to put London in using the 3 to the 4, right? And it hasn't done anything, so it has not shown its hand whatsoever, right? So we're going to put our midlines on. So the London midline, a London OU line, and we're going to put our Asia OU line in, right? And let's talk about, let me fix this real quick. All right, so let's talk about these midlines, right? Because most of you guys are discretionary traders. You're not mechanical traders. You trade off of what the price is currently doing. Like these OU lines, for me, like throughout the day, where 9:30 and 10:30 is going to be will tell me, you know, like the more that price happens, the closer to 9:30 it comes, the probabilities of where the 9:30 is are shifting. So like right now, without even looking at the data, this is going to be the probability for 9:30 to 10:30, right? But if we stay underneath of this London midline and we go below this London low right here, then my probabilities for this will shift. So let's do those scenarios real quick. So let's say London becomes a short, rejects off of this mid because that's what we're below, right? And then we breach this by 8:30, what that looks like. So let's write it out. just write everything out like this. And we'll keep it big for now. All right, scenario 1 is that London goes short from its range right? Let's look at those probabilities until 0830 without breaching the Asia mid. Right, so let's put that in. Did we breach the Asia mid between 2 and 3? We did not. So now we have 1149. Now we're going to put that Asia is short. We're going to say true. And so now we have 397 days left. Right? And we're going to say that the ADR mid was not broken between 3 a.m. and 9:30, right? Because let's be realistic, right? Between now and 9:30, for us to break this mid, we'd have to move 200 handles. Well, we already know based off of our distros, that's not a scenario that's even close to being feasible for us in the next 3 hours to move 200 handles. Not realistic. Data doesn't support it, so I don't support it. All right, so now we're going to look at 9:30 to 10:30. All right, and the highest probable is doing a range X or engulfing London by 28%. All right, the next below London's high is 20, 11, 31, 40%. And above London's low, so ICT-based traders hate DR, but like DR supports them so well if they just learn how to use it. 14, 11, 24, 25, 30. All right. So this is scenario 1. Like the reason why I think all ICT traders should go to DR, and I'm not a spokesperson for DR. I don't even trade DR the way DR trades DR. I just think that the data that they have for intraday is some of the best data that you're going to find, and it synchronizes perfect with how you guys trade anyway. If you trade supports and resistance, it supports it, right? If you trade auction theory, it supports it. After 10:30, bias long 56%, right? So let's walk through this real quick. All right, this is saying that London, from the 3 to 4 o'clock range, will go short, right, and breach this low, but it won't get far enough down here to breach the midline. And so far, what Asia has done with this long and this move, and what London is doing with this scenario, this only happened out of 4,280 days. It's only happened 80 days. All right. So now we have to put the scenario where London goes steps above the London OU and goes long between now and 8:30. Trades are my own database that I built and I pulled every single data for. But since it's under the DR structure, like I'm not going to share it. So I'm currently going through and building a different structure. So it doesn't disrespect DR, right? Because what DR, like I have respect for DR for all the amount of work that they do. And like, I'm not going to like disrespect the paying members of the DR community by releasing the stuff that they also pulled for free. So I'm just going to like redesign this whole part. I'm currently redesigning this whole system so you guys can kind of do the same effect that they do, but without like stepping on the toes of DR, because I don't feel like the drama, and I do have respect for M7 and how he trains his traders over there. Okay, so now we're going to say scenario 2 is London goes long from here, from its range, and stays true until 0830. All right, so now 9:30 and 10:30, right, engulfs London below London's high, above London's low, right? And so now, let's put that, we say true. So out of 4,280 days, this has happened 336 days. Remember the other scenario happened 80. So this has 43%, 13%, so that's 56%, 56 plus 8, so 64% below London, 6, 3, 3, so 12, and then engulfing 24%. %. Okay, let me do this. All right, so these are the two scenarios on the battlefield right now, right? Scenario 1, so what this is telling us is this represents the 9:30 to 10:30 range based off of, and when we do our projection-based probabilities, we are trying to figure out where 9:30 and 10:30 is going to lay, right? So if the rest of London goes up, right, until 8:30, right, that would be scenario 2, right? If it goes down, that'd be scenario 1. And these probabilities are what 9:30 to 10:30 will do based off of that scenario. So if it's above London's low, like this, in scenario 1, has 30% of this happening. Scenario 2 has 64% of this happening, right? If it engulfs, if we go with scenario 1, it engulfs this 3 to 4 o'clock range, has 28% if between scenario 1 and in scenario 2, it has a 24% probability of happening. And then being 9:30 and 10:30 being above this London high, the 3 to 4 high, has a 40% in scenario 1 and a 24% in scenario 2, right? Since the market hasn't shown its hands yet, we're not even going to put this on our charts. And then obviously 10:30 bias based off of each scenarios are both long, right? So because London hasn't shown his hand enough, we're not even going to try to project this, right? But we're going to keep this in mind. And then later in the session, the closer we get to 9:30, if it wants to show what it's going to do, right, we can put it on our charts, right? But for now, we're going to put the VET indicator on. The VET indicator has the standard deviations we're going to use. And since this has a probability, all right, this is wild. I love days like this. Believe it or not, like let me turn this off real quick. Let me grab one of these. Let me format it for the projection-based probabilities. Okay, putting the VET back on. We can see, like right here, the moment I put the VET on for this step, I instantly glance over here. My average 8-week range, is 1,000. Let me move this. My average 8-week range is 1,029, saying out of the last 8 weeks, on average, we have moved 1,029 handles in a week. The current one, where we currently are on Thursday, we've only fulfilled 53% of that, 546 handles. And then the hit plus negative ratio is how many times this red line was hit, which these red lines that appear on the VET, this is the average weekly high, this is the average weekly low based off of the anchoring points of what's happening, right? 50% of the time this high was hit, 39% of those 8 weeks, this low was hit, right? And then we look at the average daily range, average 10-day range, which is at 281. We're currently at 267. So we're already at 95% of our probable range. Okay, so now we're going to put probabilities in here. Let's go with this one right here. This needs to be, damn it, that is the actual right probability. Let me undo that. That's where it needs to be. There we go. Now I know I just made one. Oh, it's right here. Blue. Let's get rid of that text. Let's put in 19.5. There we go. Let's turn some of this off. So you have the ability right now to use these standard deviations like this. However, remember, I'm pulling the probabilities based off of what Asia and London has done, and those are the actual probabilities I'll use. So right here, where's the first? Should be on Wednesday. All right, now we have the probabilities. Okay, cool. Put our drawings back on. Start with a -8. This is at 19,828. And this has a 9% probability of being hit. Put this on. This is at 988. This has a 14% probability of being hit. And that's out of 4,280 days. this one on. 20123. This has a 23% probability of being hit. Put the next one on. And this has a 31% probability of being hit. All right. So now we have our downside probabilities, and we can see that they're not that favored, right? And we can see that we have been in a trend since 1800, a trend up with these hourlies have not even come close to reaching the previous hour mid or taking out the previous hour low. Right, this one couldn't get closed below the previous hour mid. It just kept going. This one breached the previous hour mid to instantly recover it. This one couldn't come close, and so forth and so forth. So right now, we're in something known as a DNP, a directional with no pullback, right? These numbers are based off of just the RTH, right? So we have to really consider, right, all these probabilities together, right? We are already at 100% of our average weekly range. We are putting a new day high, so we took out previous day's highs, all in the Globex session. So by chance, we moved 200 handles. Not saying we can't. We moved back 200 handles back here. We expect to be able to come back because the probabilities, if you look it up on Edgefold, of anytime you take out a high or a low from the previous day in Globex session, you suck back into the range. There's like an 80% chance that you return to that during the Globex session. All right. So now it's a new 12-hour cycle. Now we expect it to show its hand, right? And if we want to put projections of the upside to see what those probabilities are, we can do that. So now, oh shit, we have them. All right, so let's go and put these projections on. It's getting really crowded in this area. Let's drag this up. What's the probability of this getting hit? 73. And what's the probability of this getting hit? 49. So now what we're going to do, right, we're going to measure, we're going to start putting in our distribution. So if our average daily range is 281, which is right there, right here, average 10-day range 281. All right, and we've already hit that. Right, now we have to use some common sense. Are these probabilities up here, can they be touched? Right? These ones do not fall within the daily range or the weekly range. Right? However, we still have 50% of the weekly range to cover. So now we can start shaping our mindset to what kind of trader we need to be, right? Going to our live price chart, these blue boxes are the previous hours. It shows the highs, the lows, and the mids, and it also shows minute 5 and minute 9 highlighted, right? And if we, so they give me a clear indication on what type of market we're in. If I'm going near a high probable reversal area, then I expect for us to hit that reversal in the next hour or the current hour, like right here, right? You see, even towards the end of the hour, the last 15 minutes, we step above the 15-minute box, and then we have a hard time closing below the previous hour mid, and then we go into a trend market, or are we in a ranging market, et cetera, right? These will be the clues that you need to pay attention to today. Does this thing continue going higher, or did we reverse, or are we going to sit here and chop sideways for the RTH, right? So basically what I'm saying is these standard deviations to the upside that have higher probability, like 73%, is that feasible and reachable? Yes, it can easily take out this 12-hour high. It can easily breach 281, which is the average 10-day, range, because 281 is not that big, right? Especially if we're breaking out, so these are still possible, but I'm going to line them up with my hourly boxes that trade towards that way. All right. So now let's put our distributions on for our time base. So this one I want to do on a lower time base because I want to see, I don't need to see the last 46 weeks. I actually need to see less than the last 46 weeks for this. So now looking at the last 15 weeks on the Thursday, we can see from 4 to 8, we've moved on average 44%. Where's my 4 o'clock? So this is the current low. And it goes until 8. Right there. We can see that 12 to, Jesus Christ. So the last 16 weeks on a Thursday, 8 to 12 moves 1.6% on average. And we can see that 12 to 1600 over the last 14 weeks has moved 1.06%. So now let's turn this off and let's do some critical thinking based off of the data that we have. So if we've got the probabilities all right here, we know that the likelihood of us taking out previous day's lows right here are very slim to none, right? 14% based off of what Asia and London has done. We know that there's a high probability of the 79% structure to get taken out. We know that there's even a 73% probability for this to get taken out. But we also know that the market doesn't make anything easy, especially intraday. Not because they're out hunting stocks, because that's a false fallacy. Not because they're against retail and investment firms. No, because these kind of moves overnight, they break orders. They break a lot of orders that were placed yesterday and the day before that in the life cycle of a trade, right? So with broken orders, there needs to be a repair and a reset. And that's all I'll go into that, right? So is it feasible and realistic to think that we come down here to settlement and Globex open and structure stat 1, is it feasible for us to come back and recover some of this? Yes, it is. Right? Looking at our current RTH gap, absolutely, it is feasible. So what we're going to do is we're going to leave our mind open today, and we're not going to try to get too precise with this. But we know let's set up this. We know on days like this, statistically speaking, right, if we just look at our higher time frame chart, because this is the key to understanding where you are and what kind of day you're having. Does this day look any different than this day? Let's zoom in. This day has a very little wick and the low was created in Asia. What's saying that we can't do that today? Does this day look like this day, or this day, or this day, or this day, right? So the possibilities of us moving higher can happen, right? Based off of what Asia and London have already done, it definitely can happen, right? This would be known as, and that's why I say, pay attention to. Let me do one thing. So if we come up to this 49%, we would have put 491 handles in. Does that set us up? Wait a minute. Does that set us up for fulfilling some more of this weekly range? Yes, it does. It sets us up for being around 90% of the weekly range. Do I think that's reasonable? No, I do not. Do I think it can happen? Absolutely. If we do up to the 73%, right, based off of what the market has currently done, this will put us towards around 80% of our average weekly range, right? So this is how we maintain proper expectations and realistic growth mindsets during these kind of days, right? So now let's talk about it. These are kind of harder days to trade for sure because you're so far extended, and your first natural reaction for most of you guys is short it, but you have to wait for the right live price confirmation of that, or you will get your faces ripped off, right? Oh my gosh, it's not, why is this not appearing? Why did I turn the globe back? Globe on. I'm gonna have to go back through. Let's recreate this one for this example, and then I'll go recreate the other ones. All right. So right here is structure stat 1, right? And we know that structure stat 1 has a 79% probability. Oh, now you want to work. Now we want to draw on the screen. Now we'll say that has a 79%. What are you talking about, TikTok? I'm completely active. Silly. Oh my gosh, it has me doing this stupid puzzle. So these days are hard, right? Because like it's so far extended and all you want to do is short, right? Your job is to either take mechanical trades like Captain Backtest, Midnight Snap, distro trades that are shooting for 10 handles, right? And be okay with the fact of not missing this move right? If you did miss it, right? But to use these hourly structure points around these higher probability areas to pay attention to for it to give you clues of what New York's going to do, right? So 9:30 to 10:30 can come up, wipe that out, and go lower, right? Repairing some of this, right? So just being situationally aware. And so, like right now, I'm sitting on my hands and I'm not making a decision whatsoever. But I will tell you, this is out of this whole year's worth of data. If you pay attention to this playbook, right? What I did, what I said, how many range days versus trend days versus directional with deep hourly pullbacks did the RTH from 930 to 1600 have this year? So if it's a range, we defined it. If we pushed away from the 930 price and returned to it, right? And we spent 4 of the 8 hours from the RTH returning back to that 930, that would be considered a range. A DWP, directional with pullback, is when we go away from the 930, but then we start taking out the hourly low. The hourly takes out lows, right? So let's pretend like this is the 930 price, and we are directionally moving higher, but we're having hourlies that are closing lower or taking out previous hour lows. Or we have DNP, is when we leave the 930 price and the hourlies don't so shine a return, right? AKA trend. Like, let's say this is the 930, right? And this would be a trend, right? And we can see, let's go to September 11th. Let's put this on the 5-minute. Let's go to September 11th. That trend days higher shows certain characteristics. Let's scroll up to 930 to the 1600. So the trend days have certain characteristics, right? They even show certain characteristics during the London session, right? They show a typical, let me rewind so we can get our hourly boxes on here. And this is a good exercise for you all to go through, right? So we identify that 12-hour cycle from 1800 to 06, high to low, right? This would be that 12-hour where we pull the structure stats, right? What do we notice about this structure? What kind of market condition are we in from 1800 to 06? I'll ask you in the chat. What kind of market condition is this for this 12-hour cycle? Safely to assume that's a range, right? Because you guys are sleeping, right? And we see that the 930 gets swiped through 2 times, right? So let's put the 930 on here. The 930 is more like down here somewhere, right? We see that we moved away and then we get that instant destruction to the downside with an instant recovery to the upside. So when the hourly boxes are showing you, I can't come close to the previous hour mid, I can't come close to the previous hour mid, I can't come close to the previous hour mid, I definitely can't come close to the previous hour low, you know that you're in a trending market, right? These two signatures happen a lot, right? These two signatures happen a lot, right? The ICD calls it accumulation, manipulation, distribution, right? And if that's the way you think, that's cool because, you know, like, why not, right? Like, look at this distribution and what happened before it. What was it met with? From 830 to 1600, what did we do? Reversion to the mean, right? Stall behavior. So I don't think that we're going to have a DNP or a trend day higher, but I definitely think DWP, directional with pullbacks, is reasonable or ranging is reasonable to prep our mind for today's RTH session, right? Does that make sense? So, with all of these stats on our charts, this, since we know that there's still 50% of the average weekly range left on the table, right? And we just knocked this move right here has knocked about 20%. So we can say around 70% of the average weekly range is like 30% of the average weekly range is left on the table. Is it reasonable to expect a reversion in the mean style RTH where we drop and then we end the day higher because we know that momentum for the higher time frame is up and that we're above previous month 50% and NFP Friday. So we expect to close higher than the open. Like, yes, it's very reasonable. I never knew that, Jerry. I wonder if I actually upgraded Pro, will that fix it? Let's see. If I upgraded 2 team seats, upload and stream plus, it doesn't say anything about that. I don't know how to fix that, Jerry. I had no idea that there was a 45-second delay. All right. So I do have to jump. Listen, like right now, we can't forget about our 2 scenarios that still have to play out between now and 8:30. We've got plenty of statistics on those charts to align with our live price to figure out how to trade this thing, right? So, like, don't rush to failure. Don't hang on to your shorts forever. The market wants to go higher, it will go higher. Yes, the higher probability is to the downside, but you have to wait for live price to confirm that through the hourly boxes or through the time. Like Austin Clark does an amazing job with midnight at 8 to 12. He captures 25 handles. And that's the style of traders you need to think about being, right? Especially on days like this. Like maybe this is the day where 25 handles and 10 handles is way cooler than trying to capture a 300 handle move to the downside. Could happen. Wait for live price to prove it to you, though. I think there is a setting to lower it, but I've never broadcast on YouTube, so I don't know. Sounds good, brother. All right, guys. Have a good one. We were not able to. Oh, now everybody wants to start joining on TikTok. That I'm leaving. Listen, if you're on TikTok, get off of it for any kind of financial trading advice. They're hot garbage over there. They are literally like it's disgusting what I'm starting to see on these social media platforms and like the folly that's happening. To the point where it's so exhausting that I might actually go off the grid and just focus on veterans in a private group because like it's so ridiculous. Listen, guys, like I get it. We might not trust the financial institutions to invest our money and our hard-earned capital, but they're licensed and insured, right? They're educated. Maybe, just maybe, we don't degenerate gamble our life savings away listening to people like me or people on TikTok. Like, like I'm not giving you financial advice, but you work hard for your life savings, right? The stock market is not a lottery system. Like you're not going to get rich quick, regardless what they say over there. They don't listen. Like there's not many people out there that put more work into the intraday space than I do. There's not many more, right? And I'm not a multimillionaire. And I play some of the best trades you'll ever see, even though I can't disclose them because of my employment. Like I'm probably one of the most consistent, best traders I know, and I'm not boosting, I'm not statistical, but I put the work in, and I've finally got to a point where I can actually do it properly, where I'm comfortable with the risk I expose. If I'm not a multimillionaire, and I put years and decades and data and work into it. I know almost every style of trading strategy, auction theory, ICT, better than most of them. DR, support and resistance. And I've spent over a decade studying and backtesting this stuff. Why the fuck would 23-year-old Ricky Bobby, who's like, why would they be any different than me? So stop falling for the bullshit, because that's what it is bullshit. Like, nothing comes easy in this life. Nothing is given to you in this life unless you come from a golden spoon family. It's time to roll up your sleeves and take a professional approach to this, using statistics, using proper risk management, using, not strategy hopping. Like, stop falling for the scammers, because that's all they are. And you're paying their monthly bills with your monthly memberships, right? And yes, I know I have an $8 a month Substack for the people too lazy to read my analysis or watch my analysis. But that's more so like, I'm not paying any bills with it. So stop falling for the fucking scammers, because it's really heartbreaking to a person who's from the profession, who's been around the space for a long time. Like, I'm just telling you, you're making them rich, right? You're making them rich off of their influence costs, the membership fees, how much revenue they get from TikTok and YouTube. Like, that's another thing. I don't even get paid by YouTube. I don't even know how to do it, right? Just, I'm just saying, like, use some common sense. Think from the streets, because, like, it's very obvious that we are a generation of easy time and easy money, and people are taking advantage of that. Is all I'm saying. Just think of it. Think through it, right? Use your brain. Ask your mom or your dad or somebody you respect, does this make sense to engage my finances this way? For most of you guys watching, the best thing you can do, believe it or not, is do a budget. Take every single checking account statement for the last 6 months and highlight and categorize every single thing that you spent, where it went to, and start nixing stuff. You'll have a better return doing that on your income than anything these markets will provide. Paying off those high interest credit cards. Better risk-free return right there. If you have a 401k in a company that matches it, invest in that, because it's 100% risk-free, right? Your hardships in life will not be solved by the market, especially when you choose the lazy wrong over the hard right. This isn't a game, right? You're going against people who have crazy degrees in it. They have people who have mathematician degrees, statistic degrees, and I'm not just talking about a bachelor's. I'm talking about PhDs from Ivy League. You're not going to beat them at their own game, right? So your job is to backtest strategies that pull just enough out, that have consistent edge, and build a risk profile specifically around that, and just like get to the compounding phase. That's all I got. Deuces. Think smart. Don't be a moron. Later.